Welcome. In this video, ZBCN coin has broken the downtrend. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we closely examine the current price movements in the market, we can clearly observe that the long-standing downtrend structure, which has exerted pressure on investors, has finally been decisively broken. This downtrend had previously caused prices to pull back to lower levels, created uncertainty in the market, and at times negatively affected investor psychology. However, recent technical and volume-based developments strongly indicate that this negative sentiment is gradually dissipating and that the market has the potential to gain fresh momentum. In particular, the price breaking above the downtrend line with significant volume proves that buyers have re-entered the market and that a sense of confidence is building. This breakout is not just a random volatility move or a temporary deviation, it is a technically significant transformation. Such a trend break typically signals a structural shift in the market and suggests that bullish activity is becoming more dominant. This marks the beginning of a period in which upward price movements are more likely in the medium to long term. Currently, we are pleased to observe that the price action is performing a retest by pulling back to the broken downtrend line. This type of pullback often forms the foundation of a healthy upward move, as it indicates that buyers are regrouping and that the broken resistance level is now being tested as support. In technical analysis, this is referred to as a support flip or breakout retest, and it is typically regarded as a confirmation signal for further upside. In highly competitive market conditions, it is just as important for a trend to be retested and validated as it is for it to be broken. The current price behavior more than satisfies this technical requirement. The price has pulled back to the broken downtrend line and has been met with strong buy orders at that level. This confirms that the trend break was not a coincidence and signifies the start of a serious directional shift in the market. Additionally, the increase in volume at this level is another highly positive technical signal, as retests that occur with high volume indicate that new buyers are entering the market and that any upcoming rally will be built on stronger foundations. For investors, this development presents a very encouraging and promising outlook. The consolidation phase following the downtrend break is creating the groundwork for an upward breakout and is providing the necessary technical breathing room for the market to turn upward in a healthy manner. Moreover, this situation offers not just technical, but psychological benefits as well. Investors who were under pressure from the prolonged downtrend are now more likely to make bolder decisions, paving the way for a new wave of upward momentum. In conclusion, the downtrend structure that had been observed in the market for an extended period has now technically ended, and the first steps of a new bullish cycle have been taken. The current pullback should not be seen as a sign of uncertainty or weakness, but rather as a consolidation period necessary for building strength for the next upward wave. These kinds of retest movements are extremely valuable for market health and are usually followed by stronger and more sustained rallies. According to the rules of technical analysis, such a breakout followed by a retest means that the potential for a bullish move has been confirmed, and the price is now preparing to move higher. Therefore, the current technical setup lays the foundation for a positive outlook in the short, medium, and long term and presents a promising picture for investors. Although it is always important to exercise caution in the markets based on the current technical setup, it is fair to say that the positive scenarios are currently in the foreground. But we cannot base our analysis solely on trends. Let's take a look at the other metrics as well. Stay tuned. When looking at the market's current position, a highly positive structure emerges within the framework of the Elliott wave theory, which is frequently used in technical analysis and has historically enabled us to predict many successful price movements in advance. Especially in assets that move according to this theory, wave sequences progress based on specific rules and ratios, offering investors the opportunity to anticipate potential trend changes early. Based on our current assessment, it appears that the market is about to complete the second corrective wave and is in the transition phase toward the third main impulsive wave. This is typically the phase where investors gain the most and where the price rises the steepest and most decisively. According to Elliott wave theory, the third wave is often the longest and strongest. Since this wave contains the primary move that will determine the true direction and momentum of the market, it is of great importance to investors. In many cases, the third wave extends to at least 1/618 times the length of the first wave, based on Fibonacci ratios. In stronger scenarios, this ratio can reach 2/272 or even 2/618 in extreme cases. These ratios reflect not only technical expectations, but also market psychology and mass behavior. This is because the third wave is usually the stage where the majority of the market recognizes the uptrend and begins to take positions, leading to an acceleration in price and a peak in buying pressure. In the asset or market currently being analyzed, there are clear signs in the technical charts that the second corrective wave is about to conclude and preparations for the third wave are underway. Especially when examining the structure of the second wave, it is seen that it progressed within the framework of a classic corrective formation, and strong support levels have come into play at the point where this correction has ended. The increasing volume seen above these support levels indicates that bullish expectations are strengthening and that the market is preparing for a new upward wave. In this context, there are strong indicators that the transition to the third wave is not just a possibility, but also a technical necessity. Moreover, current market behavior suggests that we are only at the beginning of the third wave, and that the price has so far reflected only a small portion of its potential. Based on measurements made using Fibonacci projections and taking the length of the first wave as a base, it is technically projected that the targets for the third wave could reach a minimum of the 1,618 level, and in more optimistic and stronger scenarios, up to the 2,272 level. These levels not only represent theoretical expectations, but also align with the average movements observed in similar market structures in the past. At the same time, this third wave is the period when investors can capture the greatest opportunities. The first wave is often filled with uncertainty, and the second wave creates indecision. However, in the third wave, the majority of market participants have reached a consensus on direction, resulting in a more decisive, high volume, and steep rise in price. In such an environment, pullbacks are limited, while upward moves are more aggressive and impactful. Therefore, being at the beginning of the third wave, given the current technical setup, is an extremely advantageous position and holds great potential for medium to long-term investors. This means that not only from a chart-based perspective, but also in terms of overall market sentiment and external factors, the environment is now set for a strong third wave. Such a scenario offers major opportunities for investors to strategically reassess their positions, optimize their risk-reward ratios, and seize potential profit opportunities in a timely manner. When the market clearly signals the beginning of a third wave, major investors often participate in the process as well, becoming an additional catalyst that pushes the price even higher. RSI, the Relative Strength Index, which is one of the most frequently used technical indicators in market analysis, and one of the most important technical indicators that traders use with confidence in determining the direction of direction, paints a very positive and promising picture in our current analysis. In particular, the fact that the long-observed falling trend line has finally been broken has drawn investors' attention to this asset again and increased bullish expectations. The RSI indicator helps us understand buying and selling pressures, momentum strength, and possible trend reversals. In this context, the end of the downtrend on the RSI is not only a technical development, but also a clear indication of a psychological breakout, strengthening buy-side and revitalized market confidence. This falling trend line has been an obstacle for traders to overcome for quite some time. The fact that the RSI was stuck below this line indicated that momentum was weak and indecision was prevailing in the market. RSI trends are very important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.